Negative rates are the destruction of money. If we understand what interest rates are the price of risk. So when central banks implement negative rates, what they're actually doing is creating a massive perverse incentive to take too much risk, and at the same time, it does not improve the economy. The example of the Nordic countries that implemented negative rates or the Eurozone shows that first, the improvement in the economy is inexistent. Second, massive increase in debt, obviously, and very risky debt. Third, it doesn't solve the problems of solvency. And fourth, and I think that this is the most important part, is that central banks believe that the reason why credit is not growing as much as they would like it to grow is because interest rates are too high. It is not true. There's perception of high risk, there's perception of weakening of solvency from borrowers, and negative rates only end up zombifying the economy.
And did we see this in the Nordic countries that you mentioned?
The Nordic countries had to abandon their policy of negative interest rates precisely because they didn't work. And obviously, central banks never accept and never say that they have failed in their policy, but they had to actually go out of negative interest rates precisely because the impact that they wanted to achieve did not happen, and the negative effects on the financial sector, very important. The financial sector ends with negative earnings and very poor net income margins and return on tangible equity, so it weakens the financial sector, but more importantly, it incentivizes the wrong side of risk-taking.
And can you see this happening in the UK now, considering the current circumstances?
I think that the UK should not follow the example of the Eurozone. I think that, first, it has a much more diverse and robust financial sector. It also has a very strong credit environment for households in which not just banks, but also different types of lenders have a very significant private lending environment that actually is helping the economy strengthen from the pandemic. So implementing negative rates would not get the government to borrow at a cheaper rate. It is already borrowing at the lowest rates ever, and it would definitely increase malinvestment and the wrong side of risk-taking.
Seems they've avoided it for now, at least. Daniel, appreciate your insights as always. Thank you.
Always a pleasure. Thank you.